Hi guys, in today's video I'm going to share my latest Vanguard portfolio update. Every single month I share my whole portfolio with you here on YouTube, showing you the index funds that I choose to invest in and how they've performed. If you would like to see more videos like this, don't forget you can hit that subscribe button below. This week's viewer question for you is, what have you invested in the last month? I'll be interested in reading all of the comments below. So let's not waste any more time and head over onto my laptop. As always, we're going to start off with my ISA portfolio, then we're going to move on to my SIPP, and then I'm going to show you my overall rates of return both for last month, this month and since inception of the portfolio. Now, just to let you know, inception of this portfolio was September 2019. However, of course, I haven't held all of the funds since the start. So the very first fund I invest in is the Emerging Markets Stock Index Fund. You can see last month that made up a weight of 1.43% of my overall ISA portfolio, and it performed well. It was up 2.11%. This month the weight has decreased slightly down to 1.38% of my overall ISA portfolio, and I'm up 0.37%. Now, since inception this fund is up 23.39%, which is brilliant. Now, I invested in this fund because I believe the emerging markets have some great potential for growth. I only invest such a small amount that it doesn't really affect the portfolio too much. As you can see, it's only just over 1% of my whole ISA balance. I wanted just a little bit more of an allocation in the emerging markets, so I bought into this index fund. So the next fund was the FTSE All World High Dividend Yield, ticker symbol VWRL. Last month it made up 6.07% of my overall ISA portfolio, and it was up 2.34%. This month you can see that I've decided to sell that fund completely. I recently shared a video of my top investing mistakes. I'll link to that in the top corner of this video. And in that video, I shared that I think it was a mistake investing in high dividend yielding index funds. The growth on this fund was nowhere near what I was receiving in some of my just global tracker funds. So I decided that I was up, I'm going to sell it and move it into just one of my world tracker funds instead. It did pay a great dividend, but at the moment I'm trying to get as much growth as possible in my funds, and I didn't think that that was quite doing what I wanted to do in this portfolio. Next up is the S&P 500 ETF, ticker symbol VUSA. Last month it made up 45.87% of my overall ISA portfolio, and it was up an incredible 5.6%. This month it hasn't gone quite so well. Its weight in my ISA has reduced to 43.79%, and it is down 1.13%. Now, I always say to you that we're going to have down months, we're going to have months that don't go quite as well as we'd hope for, but what you really need to concentrate on is that next column where since inception this fund has made me 31.11% total rate of return, which is still fantastic. So often in the comments people say, well, why do you invest in VUSA and the next fund I'm about to show you, as it then gives you much of a higher weighting towards the North American markets. And to be honest with you, the way I see it is for a couple of reasons. Firstly, the North American markets have grown incredibly over the last 10 years, and I think they're still quite a powerhouse in my opinion. Secondly, I would argue that most of the largest companies that really affect the performance of the S&P 500 are still global companies anyway, with the likes of Google, Amazon, Facebook, Microsoft, etc. By no means am I saying that this is the right thing to do, but I like the fact that the ongoing charge on VUSA is just 0.07% too. It's been a fantastic fund for me in the time that I've invested in it, and I choose to have more in the North American markets. Next up is the World Tracker Fund that I invest in, which is the FTSE All World ETF VWRL. Last month it made up 44.49% of my overall ISA portfolio, and it was up 4.22%. This month the weight has increased as the money I got from selling VHYL, I invested into VWRL, so it's now 51.74% of my ISA portfolio, and it's up 0.37%. Now, most importantly, since inception it is up 42.35%. Now, I must say there is a bit of luck there. I did invest right on the drop back in March last year when we had the sort of coronavirus dip, so that is greatly helping these results. Another comment I'm getting asked quite a lot in the comments is, why do I invest in VWRL and not just the Vanguard FTSE Global All Cap? That would then include some small cap stocks, and there's three main reasons really why. Firstly, one of the big UK fire bloggers that I used to read recommended that fund when I was first getting started with this, so I sort of followed his suggestions. Secondly, it is ever so slightly cheaper with an ongoing charge of 0.22 compared to 0.23 for the global all cap. And thirdly, when you look at VWRL against the global all cap on a site like Morningstar and compare the performance, it's actually very slightly outperformed the global all cap, which I quite like the sound of. I must say they're both very attractive funds, and obviously the big advantage also of the global all cap, apart from the small cap stocks, is the fact it is also an accumulating fund, which means any dividends are automatically reinvested for you. And then before we move on to my SIPP, the final fund I hold in my ISA is the ESG Developed World All Cap Equity Index Fund, and this is an accumulating fund. Last month it made up 2.14% of my overall ISA portfolio, and I was up 4.31%. This month the weight has increased to 3.09%, and that is because I invested my monthly payment into this fund, and I am up 0.1% this month. Since inception, and as I said, this is not strictly true as I've only held this fund for a few months, I'm up 9.47%. Okay, moving on to my SIPP. The first fund that I invest in my SIPP is the ESG Developed World All Cap Equity Index Fund, and again it's the accumulating fund. Last month it made up 96.73% of my overall SIPP portfolio, and I was up 5.34%. This month it now makes up 100% of my SIPP portfolio, and I'm down 0.82%. Overall, my rate of return since inception is 3.17%, but I do think this is partly because I've moved some money from different funds into this one thing, so I think that's sort of skewing results a little bit. The main thing is I'm still in the green. So of course, if the ESG fund now makes up 100% of my SIPP, I must have had a second fund last month, and it was the Life Strategy 100%. Last month it made up 3.27% of my SIPP portfolio, and I was up 4.79%, and this month you can see I've decided to sell it. The reason I decided to sell the Life Strategy Fund I actually spoke about in a previous video, and I'll link to that in the top corner of this one, but basically it was due to its overweighting in UK markets, and I personally think this has dragged down the performance of this fund in more recent years. I've decided to just go 100% in the ESG fund. I like the fact that the ESG fund takes some consideration in the companies that it's investing in, and that just sort of suits my wishes, I suppose. So next up we're going to go on to the overall rates of return. Last month you can see my overall rate of return was 4.87%. This month my overall rate of return was minus 0.56%, so I'm down very slightly. Again, I don't let this worry me too much. We're going to have months where we go up and we're going to have months where we're down. This is part of investing in the stock market, but as long as you have that long-term horizon, overall I believe you will end up in the green if you invest with a long-term strategy in index funds. So finally, the number you've all been waiting for, my overall rate of return since inception of this portfolio is 37.56%. So it is a fantastic rate of return. I am actually down slightly from last month's update. I know I had over 40% rate of return last month. As I said earlier in this video, I think with me selling some of the funds and reinvesting funds at different times, it sort of skewed these figures a little bit, and it's probably cancelled out some of the growth too, but I think it's just cleaned up my portfolio a little bit. I know a lot of you will probably argue you don't really need VUSA and you should just be all in something like the global all cap, but I like sort of dabbling around and playing around a bit. If I was just in one fund, I wouldn't be able to share these portfolio updates with you too, which I really enjoy doing as it gets me looking closer into my portfolio every single month. So if you have any questions about today's video, please leave them in the comments box and I'll do my best to answer. I'm not a financial advisor, I'm just a normal guy investing my savings into Vanguard index funds. So please don't copy me, I'm just sharing this information with my community here on YouTube. Apart from that, I hope to see you on another video very soon. Take care, guys.